Do. Hey, good morning, everybody. It's Paulo Brands with your Monday market update. We always talk about interest rates as they're trending downwards, but there's always one event that could change things. And this weekend, Operation Epic Fury took place in Iran. Now, before we talk about this from a mortgage perspective, I feel like I just need to clear the air here and just make this statement. Number one, Danielle and I have two boys that are in the military we're very proud of. And, we're very honored that they serve our country. Over the weekend, you heard about some of the families did not get good news, and it brings me chills and makes me want to cry. But when I talk about this, it's not minimizing their losses. We are just purely talking about interest rates and trying to keep that out of it, which is really tough to do. So I hope we all can agree on that. And to those families, our hearts and love from military families go out to you and your losses. And thank you for your family's service. As it relates to interest rates, we're going to talk a lot. Wow, that was just too deep for me. We're going to go back in history to share with you what has happened when events like this has happened, especially as it relates to oil. So we're going to talk about that in a few minutes. But before we get there, let's talk a little bit about interest rates, where they stand today. And actually, since I've created this Monday update, rates have ticked up a little bit. They're about 30 basis higher, which means that rate with 5.125 that shows with 1 point is probably about a 1.3 in points right now in cost. So this Epic Fury has definitely had an impact on pushing interest rates higher. And it really has to do with oil. And we'll get to that in a second. FHA is at 5%, conventionals at 5.5, jumbos at 5.5. All these rates are shown with 1 point. So now probably about a 1.3 in cost. Thinking about buying a home in 2026, this Thursday, my friends, we are hosting a webinar that's going to teach you exactly what you need to do to ensure that you don't overpay, that you don't make a bad decision when buying a home. Our number one goal is that you have the best rates, the best fees, and the best chance at appreciation. And during this webinar, we're going to teach you how to do it. In the description, there's a link there. If there's not, just send me a message. I'd be happy to send you out a link to get signed up. It's going to be fantastic. Speaking of housing prices, right? We're going to talk a little bit more about the media from the past week, but check this out. If we go back to 1942, I've talked about this statistic in a different format. Now we're going to talk about yearly. If you go back to 1942, home prices have appreciated 76 years. 1 year they remained flat, and 7 years they actually lost value. Buying a home, setting aside that you're creating a home for your buying a house, creating a home for your family is an amazing investment. And here in the Bay Area, we're expecting single-digit appreciation, which great wealth can be created from single-digit appreciation. All right, here's how we're going to talk a little bit about Operation Epic Fury. This slide actually should be reversed here. The short-term impact, interest rates, we expect interest rates to go up, which is in fact what they are. But however, if history is to repeat itself, I would say in about a week to 2 weeks, things should come back to normal as it relates to interest rates. Let me give you some examples. And these statistics, by the way, I got from Barry Habib in his morning update. He is absolutely amazing. So I want to make sure I give him credit for this. But if we go back to 2020, the Soleimani assassination, this was on January 3rd. The 10-year treasury was at 1.79. Now remember, it's not perfect, but 30-year fixed rates tend to follow the 10-year treasury. On January 6th, that same year, 10-year treasury went up 10 basis points. So we saw at first interest rates went back up, but fast forward to January 13th, it came back to normal at that 1.81. So it settled a little bit higher than where it started, but that initial shock wave corrected itself. If we go back to 2023, October 7th, a Hamas attack, the 10-year treasury was at 4.7. on October 20th, it immediately went up to 5%. That's a 30 basis point increase. That is heavy on interest rates. But on October 27th, it came back down to about a 4.83. The last one we're going to talk about is a 12-day war in 2025. This was June 12th. The 10-year treasury was at 4.36. Fast forward to June 13th, it increased about 10 basis points again to 4.46. And then about a week later, back down to 4.29. So if we're looking at history in these situations, we could expect the market to react negatively at first, but then settle down as the days continue. But the bottom line is right now, if you are out there looking for a house and putting in offers, rates from Friday may not be the rates today. So you always want to make sure you're double checking, because nobody likes surprises. I don't like surprises, especially when it comes to interest rates. I love birthday surprises, but not these types of surprises. All right, here's a great article that came out last week that I want to address here. 44%. There are 44% more sellers than buyers. So why doesn't this feel like a buyer's market? Now, if I was somebody that was looking to buy a home, especially here in the Bay Area, I'd read that and go, you know what? I should wait, because this is a buyer's market, and the more housing that's going to come on the market, the values are going to come down. Now, when you break down this article, it is true at a national level, there are more sellers than buyers. But when we break it down locally, that is not the case at all. In fact, we are seeing multiple offers going well above asking price, especially on prices that are well priced. So you want to make sure that you do read you do your own research, but verify with your team. That means your team is your lender, your realtor. They're a great realtor and a great lender will send you updates on the market each week, something like this. But from a real estate side, lets you know how many listings are out there, what they're being bought at. Each market is different. Just make sure you don't get caught up in that media trap. The third one is a third Americans want a housing crash. If you are an American out there that is hoping and waiting for the market to crash, there is no data at this point that is suggesting that housing prices are going to crash. Foreclosures are at an all-time low. Interest rates on houses that are currently owned are at an all-time low. And there's so much equity in these houses, there's just nothing to foreclose on. I think when this is more of a wishful thought than anything, at this point, as we talked about earlier in the show here, that single digit appreciation is still expected, and you can still have great wealth, but you have to make sure that when you make your offer, you're working with the right real estate agent, you're getting it at the best terms, you're not overpaying. That is what you can do today to ensure that your equity is intact for the future to come. I was going to bring this back up here, but we'll skip it. We've already went over this one. All right, this week, big news. Obviously, Operation Epic Fury will be on the, what's really headlining things, especially as it relates to oil and, the allowing to pass through that strait for oil production. But outside of that, we have ADP, we have ISM manufacturing and jobs reports. These are all things that the bond market is going to watch. The stronger the job market, the fear of inflation, the higher the interest rates. So keep an eye on that. If you have any questions on that, let me know. And by the way, if you are thinking of buying a home, whether it be today or in 2 years, it's never too soon to do a home buying strategy. Click that QR code. We'd love to connect. No applications, no credit pulls, nothing. Just great strategy, great information. Utilize my 20 years of experience in this industry to help you put a plan in place that's going to allow your family to pay the least interest and save the most money. All right, you guys, Paul Obrant's Clear to Close Brokers. I hope you guys